A presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Fred in Denver. Hey, Fred, what's going on?
Hey, Tom, listen, it's an honor to speak to you. I wanted to tell you, I'm one of your successful tigers, and the reason that I'm successful, I probably read a couple hundred books on technical analysis over the last 10 or 15 years. I'm a retired public school teacher, and I heard you talking today on your earlier show that if you really knew what you were doing in this business, you probably wouldn't have to work again. And I wake up every morning, I look at your book, I can tell you, every other author is just pales in comparison to your clarity. I just wanted to thank you.
Oh, I really appreciate it.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. And, of course, let's make it a great night. Let's take a look at one of our 4 agreements. Take action on your ideas. Doing your best means to take action. You can have many great ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We have the Dow Industrials up 69, Nasdaq up 25, S&P's up 11, gold contract up $24, trading at $1,632 an ounce. Silver up $1.08 at $29.86 an ounce. Platinum up $37 at $1,463 an ounce. Copper up 9 pennies at $3.50 a pound. Light sweet crude up 88 cents, trading at $102.19 a barrel. Bonds down 4 ticks at 142.25. Dollar index off 22 ticks at 81.16. The euro up 9 at 127, and the yen flat at 76.84. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We got to 1296.46. You close out at 1292.08. And, of course, we've been waiting to get this little baby hit at that October 27th level. It bangs it out today. Now, check it out, folks. We did $832 million versus $1.4 billion. So the bottom line is that you're up at these levels. Volume's dying on the vine, which I suspected. Now the real key is that, okay, how much further is it going to go over those levels? Okay? So we're going to walk you through this. So check this out. So the S&P's 1292.66 was the number. You hit the 1296. You don't have enough volume. You close at 1292.08. Now, the 1292.08 does take you over the 1284. So watch this now. This is where it gets deviant. We're going to go to the SPY next. You take a look at the SPY. SPY also does not have the juice. Not even close either. What the SPY did is this. The SPY does 113 million shares today versus 393 million. The high of the 27th was 129.42. We got up to 129.65. You basically closed at 120. You did close at 129.13. Dramatically lighter volume. Now, my take is that we're going to go for it again. It's not going to have the volume. It just wants to go higher right now. Let me show you why. What you have on the way back down is you have 2 days from January 3rd. January 3rd, the high of that day is 128.38. You have 193 million shares. Then you have 173 million shares at 128.23. Those 2 days there are actually going to support a pullback into those numbers before it tries to get over this high again. That's the deviance of the market. That's all that is. So that's the SPY. We go over to the Dow Industrials. We take a look at the Dow. What you have with the Dow is this. Dow's been over the highs of the 27th for over a week and a half with no volume. We're at 12,462. The Dow wants to basically get into this 12,566 to 12,700 area. Now, composite, the NASDAQ composite. The composite has two nice gaps right now. Now, this is where we're going to put it together. The high of the October 27th is 27.53. Now, we haven't hit that 27.53 yet. We hit 27.12 today. We did it with 1.8 billion versus 2.4. So the same thing's happening there, not even close, right? What I expect you're going to see, and this is where the harmony comes inside the market. So first off, you get divergence. The divergence is you're going into the swing, you don't have the volume, wants to take the swing out. The harmony comes to the basis that we already have the Dow over, no volume. S&Ps went over today, no volume. NASDAQ Composite wants to basically gap over. That's the way this is looking to me right now. And what you'll get is this. So the 27.53, we have two small gaps right now. The first gap that was generated out there was on between the 30th and January 3rd. Second gap was this morning. What I expect you're going to get here, and this will end up being the sell, you'll get a gap over the 27.53. That's the way this looks to be setting up at this point. Now, let's go over and we take a look at the gold market, because this is going to be a tight call, folks. That's the bottom line. And when I say tight call, I'm talking about the market in general too. And this is why, as I go through this. What the gold market did out here today is this. Gold is up 23 bucks. We did 151,000 contracts versus 265,000 contracts. That's a bad scene, folks. That is a bad scene. That is saying, number one, that the contract's going to come back down to 1533. More than likely it's going to get a 1450. Now, if that's going to happen, the market's going to get smoked, right? We'll go over to bonds. We look at bonds. What bonds did out here today, USH2. So, what bonds did out here today, sorry about that. Here we go, folks. Okay. Bonds pulled back with 237,000 contracts. That, folks, is anemic pullback. It's coming back into 350 and 400,000 contracts. The way bonds did close at this point looks like, yes, they're gonna take it lower. You know, it's almost like today was really deviant in the bond market. You know, with the market up this much, bonds basically should have got croaked. You know, they didn't. You know, I suspect, yes, the game is still on, that the market still wants to go slightly higher. Bonds want to go slightly lower. And then, kaboom. Then we're talking about a bond, 30-year bond, up into the 160s, which is just going to be insane. But the way that baby is set up is that means our market's going to take a hit in a big way. And now let's go over to the King Dollar. Because if you look at King Dollar, what King Dollar did out here today is this. She only came back with 14,000 contracts. You're at 81.18. Now you are back inside the 81.41, which sets up that, oh, listen, okay, you know, get down to 79.84, pretty easy. You get down to 78, pretty easy. How we come back into those lower levels will, if we come back like we're coming back today with dramatically lighter volume like we have in the dollar, you're going to see this dollar take off to 85, take off to 89, and the texture of the market there is just going to get smoked. Now, what else are we looking for? Well, when you start going up like this, folks, okay, what I'm going to specifically be looking for, well, here, let's go over to the 3 Qs next. So if we look at the 3 Qs, what do we have with the 3 Qs? The 3 Qs also have not hit the 59.20 area yet. We hit 58.40 today. No volume. 35 million shares. But you know what? The Qs want to hit it, folks. And this is where patience comes in the name of the game. And what also comes in the name of the game? You want to see the euphoria in the marketplace. And how are you going to see the euphoria in the marketplace? You're going to see the euphoria in the marketplace by the trend reading, which is not, it's not low enough yet. You'll see this trend come down to a 0.17, a 0.27, a 0.15, somewhere like that. And then you're going to see a few monster upticks. And those upticks will come in somewhere around plus 1,200, plus 1,300. And what is that going to do? That is going to be one heck of a high. And I suspect we're going to see it. We're going to see it in the next week. So We get some trading action out here, and you get some action in spades, folks. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the high-volume stocks out here, we didn't have high-volume stocks. These were the highest volume in the marketplace. You had Netflix up $11. So much for someone downgrading Netflix today. It was up $11. You got to love that. Intel was up 18 cents. You had, let's see, Micron Tech was up 9. Chesapeake Energy was down 42. We had Wells Fargo up 37. Some of the Dow stocks out here, let's take a look at it. All you have to do, IBM couldn't get cooking. If IBM, which is 11% of the of the Dow, folks, that gets cooking, that'll get the Dow up where it wants to be. We had Caterpillar up 286 out here today. Coke was up 41. We had, let's see, Big Blue was down 28. We had Johnson & Johnson up 27. Let's see where good old Microsoft is. Microsoft is pushing into those highs. And as it is pushing into those highs, let's see, 1 second. Microsoft, yeah, she's building cars. She's building cars to get over that 2814 area. Let's go to Dave in Denver. Hey, Dave, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You having a good day out there?
Yep, doing great.
Cool, man.
Hey, Tom, I put a buy order in for SDS at $18 even. Is that in the area, do you think, or is that a little too high yet?
Yeah, I'd take it out. Let's take a look.
Okay.
You got SDS. SDS, folks, is the Pro Shares 200% inverse short position of the S&P. The low is $18. The high is $28. I'd take it out because the way this market is set up right now, Dave, it looks to me that what you're going to have when the position is to sell is that it's going to be a gap higher. It's probably going to be an exhaustion gap in the NASDAQ. That's the way it seems to be looking right now. We just lost him. So the bottom line, folks, is that when you do have gap aways like this, particularly the way that the market is setting up right now, you see, first off, it was deviant number one that I wanted to go to 1292. It's more deviant, of course, you gap over that. You get to the lows of the highs. And, bottom line is that's a much better reward versus the risk that you take in trade. It's absolutely huge. The reason being, by the way, folks, is that these lows, from October and August are going to get tested. They're monsters down there. You're talking about huge amounts of volume down there. You're not going to just walk away and do $800 million on the upside when you just did 1.4 and 1.6 on the downside. That's not how markets move. Markets move where the volume is, and the volume is downtown, folks. This is Tom O'Brien. This is TFNN. Don't forget, folks, if you want to understand how bottoms come in, meaning making bottoms, the tick and trend index is tomorrow night, folks. We're going to be right back.